Hi friends, welcome once again to Jerry's Guidance, and this is the Casual Accounting Coaching Series. Friends, so far we have covered 5 different topics. So we started with meaning of accounting, difference between accounting, accountancy and accounts. We have seen what is an accounting cycle, we understood the rules of debit and credit, and finally we have seen what is accounting equation and how transactions are given effect in accounting equation. Friends, today we are going to start a new topic, and that's very important. Here from we start the actual accounting, that is journal. So friends, we begin the lecture 9, that is journal. So if you remember, when we were discussing about accounting cycle, there I mentioned that the first thing that we have to prepare is a journal. So all the financial transaction, all the business transactions are first recorded in journal. So friends, that's why journal is known as the primary books of account. So it is known as primary books of account because this is where we are recording the transaction for the first time. So journal happens to be the primary book of accounts. So before I explain you how we are going to draw up the journal, please keep in mind that all the business transactions are recorded in journal, and therefore whether it is a purchase, whether it is a sale, whether it is an expense, everything will find place in journal. Friends, this is what is journal, and now let us see what is the format of journal and how we will prepare journal. Okay, so friends, this is the format of a journal. So you can see on the top I have written in the books of. Then I have not written anything because it can be the name of the company or name of the business. Okay, entrepreneur or business, whose business it is. Suppose it is in the books of ABC Limited or in the books of Messrs XYZ. What we are preparing? Journal. So on the top I have written journal. So you can see there is a date column because on what date this transaction has taken place we have to check. Okay, because you will be given a list of transactions, and whatever date that transaction has taken place you will have to accordingly note it here. Then you have particulars. I'll explain you what you have to write in particulars. Then we have this ledger folio. Ledger folio means, as you know, from journal it goes to the ledger. So we have to give a reference number here. Okay, that in which ledger number it has been posted. So we write ledger folio. Since it is not a real life situation, so we will keep it blank, and then we will write the debit and we will write credit. So we will begin with a sum today, and believe me, it will be very easy if you remember the rules of debit and credit. I already explained you the rules of debit and credit, and quickly let us revise. What was the rules of debit and credit? Debit, what comes in. Let me write debit, what comes in. Credit, what goes out. Credit, what goes out. This we have seen. Then debit, the receiver. Debit, the receiver. Quickly I am writing here. Credit, the giver. This you have to remember. Okay, there are 3 rules like this. Debit, all expenses and losses. All expenses or losses. And credit, all incomes and gains. All incomes and gains. So friends, this rule you have to remember before we start solving the problem given for journal. Okay, so this rule is the rule of real account rule. This is the rule of personal account, because there are 3 accounts we have in accounting. Okay, these are the golden rules of accounting, and this is the nominal account rule. So friends, we have to remember this if you have to do journal. This I have already covered in one of the previous lectures. So let's have this question. Journalize the following transactions. So you have to put it in journal. You are given some date information, and there are some transactions that has taken place. See, according to the dates, January 1, January 3rd, some transactions have taken place. So let's start with the first one, that is January 1, started business with cash rupees 80,000. So I will write here January 1, 25. January 1, 25, started business with cash rupees 80,000. This is the question, started business with cash rupees 80,000. Okay. So cash is a real thing. So we will follow the rule of real account, debit what comes in. So you have started the business with cash. So cash will come in, debit what comes in. Cash account, you will write here debit. Debit what comes in, and okay, to capital account. So remember that whenever you are starting a business, this is the entry. This is the journal entry that you must have to follow. Cash account debit to capital account. This cash is coming in the form of capital. This is the capital of the business, because whenever a person starts business with something, that something, whether it is cash or not, that will be considered as capital. Whatever a person starts a business, we call it capital, and the entry for this is always cash account debit to capital account. Okay, if he is starting the business not with cash, suppose he is starting business with some goods or some stock, so you will write stock account debit to capital account. Okay, so whatever the business is started with, what is coming in the business cash is coming in, so debit what comes in, cash account debit to capital account. Okay, so it's 80,000 given in the question, 80,000. So I will write, since it is debit, I will write in the debit side, keep a dash in the credit side, and this one will be in the credit side. So it is a double entry system, so double, 2 times you have to give the effect. So capital is credited. So in journal we don't write CR, we just write DR for debit, and 2 represents capital, means the credited account, which account is credited. So to capital account. So this is credit and this is debit. So after this you have to give a narration. You have to narrate what has happened here. So you read being business started, being commenced or commencement of business. Commencement of business. This is a commencement of business. Okay, you close the bracket. So all journal has to follow with a narration. This is called narration, and then you will give a double line to close this. So I will request you to use scale so as to have a neat and tidy journal format. Right, we are done with the first transaction. Let's move to the second one. Received cash from Ram, which date? 3rd January. So remember, 3rd January we are to record a transaction, and what is the transaction? Received cash from Ram. So when we receive something, debit what comes in? Cash is a real account. What is coming in? Cash. Cash account debit. Okay, so cash is a real thing. So debit what comes in, and it is received from Ram. So Ram is giving us. Ram is a person, so personal account. So credit the giver. Who is giving? Ram is giving. So to Ram account. So what you are writing? Debit what comes in. So cash account debit, and credit the giver, because Ram is a personal account. So credit the giver. How much is this? 15,000. So we will write here 15,000 this side also. We'll write 15,000 this side also, and we will write being cash received. Cash, we will write being cash received from Ram, and we'll draw a double line, and this entry is over. So it is simple. Debit what comes in, cash is coming in, and credit the giver. Who is giving? Ram is giving. Let's move on to the next one. 4th January. Purchase goods for cash rupees 2500. When we purchase, what is coming in the business? Goods are coming in. So we will write the date first. It is 4th January 25. We are purchasing goods. So remember, we write purchases account debit. So whenever you purchase, you write purchases, because it's an expense. Debit all expenses. Okay, debit all expenses. Purchases account debit. 2. When you purchase, you have given cash, so credit what goes out, cash is going out, cash account. See, in this case, cash was received from Ram, so debit what comes in, and this time you are purchasing, so cash is going out. Okay, here Ram is the giver, but here it is not Ram or anything, you purchased it, so it is purchases account debit to cash account. So it is 2,500. Slowly as you practice, accounting is all about practicing, so you have to practice. If you don't practice, you will not understand. Being goods purchased, so you purchased goods. So when you purchase goods, you might be thinking goods is coming in, so we will write goods account debit. No, whenever you purchase, you have to write purchases account debit, because purchases is an expense for you, since you are dealing in this business, since you are dealing in this buying and selling thing, so it is a expense for you. Opposite, now you are selling sold goods to Hari rupees 3200. Sold goods. So when you sell goods, what is coming in? Cash is coming in. Cash is coming in when you are selling the goods. Cash is coming in, friends. Whenever we are selling the goods, cash is coming in. So when the cash is coming in, you will write debit what comes in, right? So when you are purchasing, see here you were purchasing. Here you were purchasing, purchases account debit to cash account. But now you are selling. So when you are selling, so what is happening? I repeat again, when you are purchasing before, so cash was going out. Now you are selling, so cash should come in. But friends, here it is written, there it was purchasing, so cash was going out. But now you are selling, so you will say cash will come in. But friends, you will not think it to be a cash sales, rather it is a credit sales. Whenever it is a credit sale, name of the person will be given. I repeat, when you are selling, cash should come in. But in this case, cash is not coming in because it is a credit sales. How do you know it's a credit sale? Because the name of the person is there. If name of the person is there, then it is not a cash sales, it is a credit sales. So if it is a cash sales, cash is coming in. So debit what comes in, you will write cash account debit. But here it is not coming in, rather it is a credit sale. So you will write debit the receiver. Who is receiving? Hari. Hari account debit. Hari account debit to sales account. Remember, if purchases is debited, sales is always credited. If purchases is debited, sales is credited. Here purchase was debited, so sales is credited. Being goods sold to Hari. Goods sold to Hari. Okay, which date? It was 11th January 25. How much goods sold? 3200. So we'll write 3200, 3200. Okay, so done. Okay, now going to the next one, that is on 13th. So please don't have any doubt. Goods sold, if simply it is written and no name is written, then it is a cash sales. So cash account debit to sales account. But since it is a credit sales, Hari account debit the receiver to sales account. Okay. Paid Ramesh rupees 1400. So I paid whom? Ramesh. So debit the receiver. So you will write 13th January 25. Debit the receiver. Ramesh account debit. Debit the receiver. Whenever person's name is coming, it's a personal account. Debit the receiver. Ramesh account debit. And since you have paid, so cash is going out to cash account. Cash, the credit what goes out? Being cash paid to Ramesh. Paid to Ramesh. Okay, friends. Being cash paid to Ramesh, how much? 1400. Here also 1400. Okay, we close the brackets. Done. I hope it is clear. Debit the receiver and credit what goes out. Okay. Next, received from Hari. Remember, Hari we sold just now 3200 on credit. Now Hari has given us 1100 on which date? 17th. So we will write 17th January 25. Received cash. So debit what comes in? Cash is coming in. Cash account debit to Hari account. Hari has paid us. Credit the giver, because Hari is paying us, so giver has to be credited. How much he paid us? We received 1100. So 1100 this side also, 1100 this side also, and we'll write being cash received from Hari. Being cash received from Hari. Done. Next is our number 20. Bought furniture from Ram rupees 2200. See, whenever we buy, cash should go out, but it is not a cash purchase, it is a credit purchase, because the name of the person is there. So whenever name of the person is there, it is not a cash purchase or cash sales. So in this case, it is a credit purchase. So debit what comes in? So whenever we are buying something, what is coming in is the furniture. So furniture account debit what comes in? So furniture account debit to cash is not going out because here it is a credit purchase. So credit, debit the receiver, credit the giver. Who gave us? Ram gave us, Ram account. So you will write rupees 2200 and 2200. So we will write here being furniture purchased from Ram. Furniture purchased from Ram. Okay, done. Last one. Oh no, not one more there. Paid rent rupees 480. Paid salary 1100 but different date. Okay, so we'll write 27th January 25. What happened? We paid rent. So debit all expenses. Rent is a nominal account, all expenses. So rent account debit. What goes out? Cash is going out when you are paying, cash account. So it is 480. We'll write here 480. So being rent paid or being payment of rent. Payment of rent. So you will use the word being always so as to make it clear that it's a narration. Okay. Now we are left with the last, that is paid salary rupees 1100. So what is the date here? The date is 30th January 25. Paid salaries. So we'll write salary account debit. Salary account debit to cash account. Because why? Salary is an expense. Debit all expenses. So being payment of salary. Being payment of salary. So salary account debit means debit all expenses. So we paid the salary. How much is our salary? 1100, and this is 1100. So that's all, friends. We completed this first problem. So I know that this is the first problem, that there will be a little difficulty to understand, but if you remember the rules of debit and credit, it will be easy. Just that you have to recap, and please rewind this video again and again, and if you have any query, do comment it. Bye bye. Thank you.